8.5% now on the futures. Tata Motors has slid to 317 and a steep slide coming in after JLR commentary saying that they see negative EBIT margin in the first and the second quarter of the fiscal and that chip shortage is only going to worsen from here. Let me also welcome on board another expert, Mitul Shah, as well, from joining in from Reliance Securities to analyze this bit of news in Tata Motors. Mitul, clearly a knee-jerk reaction on Tata Motors after them saying that they expect a chip shortage and, that's going to hurt their margins in both the first and the second quarter as well. How grave is this problem and did you foresee this coming in?
Yeah, everyone expected this shortage to get resolved by mid of Q2 or by end of Q2, but now companies say entire Q2 will have this issue and it will report negative EBIT margin in Q2 as well, in addition to Q1, because they already highlighted in conference call that Q1 would be lost probably because of this supply issue. But this negative surprise coming here is about Q2 losses also. So it is a negative development and earning cut would be happen sizably for FY22 because of this. And that's why the stock reaction. But see, we have to understand that this issue is short term. It is not structural. And it is again purely a shortage of some components. Nothing to do with the quality of the JLR product, or it's an industry-wide phenomena. It is not very specific to the company. Some people are facing more problems, some are less. So any major price correction is a definitely very good opportunity to have such a great company.
But after this commentary, are you going to rework your price targets and cut them perhaps?
See, our price target is based on we follow 2-year target price. So we look at FY23, FY24. So whatever issues are there, we believe that should get resolved before end of FY22. In fact, what will happen, company has a strong order book also. So if the issue gets stretched to Q2 end or maybe to Q3, its spillover positive impact will happen in FY23. So some volume from FY22 would get shifted to FY23. So definitely 22 earnings will see downward revision by street including us, but 23 earnings may get slightly upward revision because of this. So price target should not change much.
Think that the redeeming factor would be the company's plans to prioritize their production of higher margin vehicles as well as a substantial improvement in the operating cash flows, they're saying, in the second half of the financial year as we see the chip supplies improve?
Yeah, so that is, as you rightly pointed out, so it's a key positive point. One should consider that it's a new experiment company probably for first time playing out, wherein they'll clearly focus on the high margin products only because they have limited resources to produce limited number of vehicles. So they'll completely ignore loss-making products or at very low margin products. So particular focus will come to the Land Rover brand and Discovery and all those type of products. So it is very much possible that the volume decline may be by X percentage, but margin and profitability fall may not be as high as in proportion of the volume decline, because volume will be from the high margin segment. So margin territory may shift slightly and margin correction would not be very high. And second half will definitely cover up, though it may not cover entire H1 losses, but Q2 losses would be covered up in Q3 and Q4 because company already has a strong order book.
Thanks very much then, Mitul, for assessing that situation for us. Keep an eye out on Tata Motors, hefty beating in trade on the back of that news coming in. Although the stock has recouped some of its losses, the Tata Motors DVR and Tata Motors are down and out in trade. Let's get a move on then and continue to focus in on autos. And as the country is unlocking, Motown is certainly betting big on pent-up demand returning in the month of